Welcome to Power Charting. I am your host, Bruce Frazier. We have a very special episode today with special guest, Wieland Arlt. And Wieland is a most interesting person, and he's written this wonderful book, which I put up on the screen, Risk and Money Management for Day and Swing Trading, which is part of his educational process. We'll let him talk about that here in a second. Wieland, welcome to the show.
Bruce, thank you so much. I'm so happy to be here together with you. Greetings to all the Power Charting members and followers and Power Charting community. So I'm happy to be here together with you, speak about, well, some special trading techniques, my best trading strategy, and trading in general. So happy to be here.
Fantastic. So this is going to be a great session. Wieland's going to talk about one of his trading approaches, which is one he favors, and also just a little bit on Wieland. He is the president of the International Federation of Technical Analysts, which is a society of all of the different technical analysis, many of the different technical analysis societies throughout the world, and he does a wonderful job. And so we want him to just take a few minutes and tell us more about that. I'm going to let you read about Wieland here. When you have a few extra minutes. I don't want to take up his time other than to say that he is a professional trader. He is a very sought after speaker, and he teaches trading and technical analysis through his Torero Traders School. And so we're going to get just a little bit of a glimpse into his teaching approach, his money management approach. And so with that, I just want to say one thing. Everybody needs to be a member of IFTA. And the way you become a member of IFTA is you join your local technical analysis society. We have 2 in the United States. If you're in another country, you'll want to check that out. You can go to ifta.org and look up your local society. So we have AAPTA, American Association of Professional Technical Analysts, and we also have the TSAASF, which is a great society. There's professional designation for APTA, but for the TSAA, you just have to be in love with technical analysis to be a member, and you should be a member. And so, Wieland, tell us more about IFTA and what's going on in that great organization.
Thank you, Bruce. Well, actually, yes, I'm the president of IFTA, and I'm so really I'm enlightened because of that. We had a couple of days ago, we had a board meeting. Got elected for a second term, so second year of my presidency, and this is really something I couldn't be more honored. And what we're doing in IFTA, yes, it's a federation, it's the International Federation of Technical Analysts. It was founded as a federation for most professional technical analysts worldwide. So more institutional ones, less retail, but it changed. So we had a conference last year, our very first online conference. Usually we have them in person somewhere in the world. And this was our very first online conference. And it turned out that we had a lot of attendees from all over the world, of course. Most of them were retail. And I felt like, oh my goodness, this is something we didn't have in mind so far. We thought, yes, of course, we're institutionals. Yes, of course, we're professionals. But I wasn't aware that we have so much attention by retail traders. And that was some kind of turning point that I decided to offer, and we're working on this right now, some more educational parts for private investors as well as, of course, for professional institutional ones. And to put this on top as another educational product IFTA offers next to the CFTe certification or the MFTA certification, where you're a master of financial technical analysis. So
fantastic. Well, the TSAA, just for everybody to know, tsaasf.org has got some wonderful technical analysis education in the website. So you can go check that out. And of course, the other thing that Wieland does is that he teaches technical analysis and then how to be a successful trader with those tools. And so this is something we really want to talk to him about today. But we will have Wieland back to talk more about IFTA and about all things technical analysis. But I really want you to get into your presentation, Wieland. And so I'm going to stop sharing my screen, and we're going to take a break here and then be right back. And Wieland is going to start by showing us some of the great things that he's doing. Okay, Wieland, you've got the screen. I'm very excited to see one of your strategies.
Yeah, it's my favorite one. I call it the expander strategy. Why? Because it goes about when is a price overstretched, you know? Because as traders, and that is kind of the idea of the strategy, as traders, we are always looking for some entry point where we really can make sure that price doesn't move in that direction, but maybe change the direction and goes into another one, right? So we're looking for the perfect entry. But the question is really, is there a perfect entry? Of course not. So we have to find something to get the best way to enter without having a perfect situation. That's one thing. Second is that as traders, we are facing several stages of a trend. We have an up move, we have a down move, we have a sideways trend, we have correction. You know, we have the impulsive move and we have the corrective move of one of the same trend. So there are countless strategies we can use for trading. We can use breakout, we can use trend following, we can use counter trade, we can use box trading, the countless. So if you look in the toolbox of a trader, it's like it's filled to the top. So a lot of strategies or a lot of techniques can be used, can be applied, and all of a sudden you lose track of all of them because it's too much. That's what I experienced, and that was why I was asking this question: if there is a strategy for sideways markets as well as for market corrections and trend continuations. So really, you look like the Swiss knife for trading, which you can use literally for everything. And I felt like there got to be something. And I read this wonderful book by John Bollinger, and I felt like, okay, this is something I could use for this. Because the ingredients of the strategy, one of those are the Bollinger Bands. And I'm so grateful that John developed these bands and introduced them back in the 1980s to the public. Because, and this is a quote, Bollinger Bands are channel lines drawn in and around the price structure in a chart. Their purpose is to establish the relative definitions of highs and lows. Prices near the upper band are high and prices near the lower band are low. So just giving that as a quote, it says like, okay, prices are high and low. But I like to discuss this quote a bit, because as traders, we always struggle with the definition of high and low. When is a price really high? Actually, no one can really tell. Is Tesla high? Is Tesla low? Is Amazon high? Is it low? Nobody knows. You know, Apple or Bitcoin, is it high or low? Nobody knows. So how can we make a trading decision if we don't know if a price is high or low? Maybe it gets higher, maybe it gets lower. So when is it high or low? And the bands, and I love them, the bands tell us that they are relatively high or low. And it changes everything. They are not high or low, they are relatively high and low. The question is, compared to what? And of course, compared to their own average. This means if the price gets away from its own average, rising or falling, they're getting relatively high compared to their own average or relatively low compared to their own average. And this has an impact of the next move. Because, and if you use the bands for that, prices near the upper band are relatively high and prices near the lower band are relatively low. And this, when I thought about this interpretation changed for me everything. Part one and part two, what changed a lot, even more for me, was the interpretation of some studies John did. He says with 20 time units and a standard deviation of 2, in most markets between 88 and 89% of prices are enclosed by the bands. Make it easy, 90% of all prices are within the bands, 10% are outside. And it's true. This is a daily chart of the cable. So what we see, yes, approximately, it's quite true. Most of the prices are within the bands. But see what happens if they go outside. Outside, coming back in. These are the 10%. Here we have the 10% of all prices. And that's some kind of interpretation. Of course, you can say, yeah, well, it's just one sentence and one quote. But what does this mean? It means that prices are, if they are outside of the bands, they're the minority, but they want to be the majority again. Not that prices can think, but you know what I mean. So they tend to return back to the majority. They tend to return back into the bands. That's one interpretation of that. Second interpretation is that if the prices, upper or lower bands, are relatively high and relatively low compared to the average, and if they're outside, they're even more lower or even more higher compared to the average, and they tend to return back into the bands. Guess where they do want, where do they like to return to? Of course, they return in the direction of their own average. It's like a mean reversion, the reversal to the mean. Their own average.
The other part of this is that Bollinger Bands, which I love, by the way, and I have a screen set up in stock charts just for look at stocks and markets for their Bollinger Band characteristics, but also this is relative to itself. And so the volatility that is being calculated inside of these bands is a function of the individual instrument that you're studying here. Mm-hmm. So it sort of has an organic quality to it also.
Yeah. So if you use just Bollinger Bands, if you use just a simple moving average as a first target for a counter move, doesn't mean there's really a trend reversal or so, but it just means that it's the reversal of the previous move, which is fair enough. And one very simple target here is the moving average. In this case, moving average 20, which is the basis of the Bollinger Bands. So, and as I thought about this, I thought, well, this is logical. This sounds like something that happens all over again. And as traders, we need something that happens all over again. We need something that we can redo and redo and redo all over again, the whole day, the whole week, the whole month, the whole year. Something we can trade every time with the same systematic. And just look at this. That's what I'm talking about. You see here? And if you combine this with technical analysis in terms of support and resistance, broken support, fast break, move up. Beautiful. That's it, period, right? Yeah. And relatively low, even lower, fast break, buyers come in, candlestick, boom, here we go. And then there's the reversal. So that's one idea. But of course, and we also have to have this in mind, that just by talking about Bollinger Bands and saying, okay, price is relatively high or relatively low, and even if they go outside, they're even more low and even more higher, doesn't mean that we have to act immediately. Just look at this. If you go short right here, you will destroy your account maybe. So of course, it's not a good idea just to act and react because prices go on the top or go below or outside of the bands. We need to have something more in hand to make a clear decision. And what I use here are reversal signals. Of course, these are the simplest ones: hammer, shooting star, reversal signals with candlesticks. So I love candlesticks. Why? Because no other chart method can compete with the candles when it comes to the diagnosing the health of the market. It's like feeding the pulse of the market participants. And even more, you know if they, how they feel, if they're happy about their trade, if they are in doubt about their trade, if they have fear, you see it, you feel it. With candlesticks, you get the whole message. It's like the market is talking to you. Why? Look at these candlesticks. This is power, right? So there's no upper shadow right here. This is pure selling. And let's say this is some kind of profit taking. Okay. But it doesn't mean anything. This is picture of power. There is no buying at all. And the same is here. Picture of power. There's no selling. This might be profit taking. It's just for, well, you know, I wanted to show a little bit shadow, but it doesn't mean anything that there's any selling pressure, there are any sellers around. Pure power. What is the expectation if you see a candle like this? Of course, that there's some kind of follow through, that the next period of trading might end up even in the green or the red color of the candle. So that's a pure interpretation because of power or weakness. And weakness is something we can see here. So what happened here? Usually you see these candlesticks all over everywhere. So you have an open, you have a low, you have a high, you have a close. But what has happened here? Just take a look at this and ask yourself, as a trader, how do you feel about this? You have an open, markets go up or down, depends where you are, having a high or a low, and all of a sudden everything changes. Prices drop, and he who has been a winner becomes a loser. A profitable trade becomes toxic in your depot, right? And you are forced to make a decision because everything changed. So you're sitting here maybe on a big loss. First in the book, but you have to make a decision. And usually the decision will be one, that you exit the trade the moment it drops and breaks a low, or if you're short, if it breaks a high. Usually this is what we do. And I'm pretty sure we all experience this countless times. And if this is true, guess what happens here? So something is very wrong here, and it's true because this candlestick has been completely, completely red. And right now, all that's left from the selling power is just a shadow of themselves. And all traders who sold here, 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 even though here's some pure guy, very poor, who sold for the very last low price. And
I've certainly done that many times.
Yeah, we all did. And we all experienced the pain that happened immediately afterwards because we were those poor guys who made history, because what we did is visible in the charts forever.
I'm feeling the pain right now just looking at this chart.
Sure, right?
Yeah.
So, at least you made history.
Yeah, right. More than once.
Yeah. So you have to make a decision, and the decision will be, I go out, I exit the moment the price goes over this high, or I exit the moment the price drops below the low. And that's natural. Everybody does the same. We all feel the same. So this is weakness. And of course, we have candlesticks like those, like we call them dojis. Most of you know already. These dojis are signs of indecision. Nobody really knows what will be the next move. It's like stepping on the brake. So these are candlesticks I look for and I really watch for. And this is the idea of candlesticks in general, in a nutshell. So typical reversal signals are hammer and shooting star. So these pictures of pain, I call them pictures of pain because this is what they do. They show pain. You need to have a down move, of course, and then a reversal. And the idea is, of course, having some kind of stop entry. That's how I trade them, with a little space underneath and above. I like the market to prove to me that the market is serious about the next move. So I don't want to get fooled in or out. So I leave a little space, like a pip, cent, point, whatever, so that I have little space for the market to move. And then it looks like that. Even though you don't have any Bollinger Bands or indicators or whatever here, you feel like, yeah, we have a good signal here. So if you go for a reversal, best entry ever. If you trade the breakout, well, you see the difference, right? If you'd like to trade from the correction, best entry ever. If you go with a breakout, pretty late. So that's in general, if you trade candlesticks, if you trade signals by the candlesticks. And if you combine this, wow, it's amazing. Again, the touch of a band by itself is never a signal, never. It can't be, so don't do this. We need to combine both. Again, we have Forex here. It's a 1 minute chart, so it's just an example. So you're not forced to do a 1 minute chart, of course. But you see, 90% of all prices are within the bands. That's what we can see. If they're outside, they tend to reverse. Do they have a big impact? No. This is what has an impact. Price shoots outside of the bands. Some poor guy bought. All of a sudden, he became a loser, building a shooting star, stop entry, mean reversion, first target, second target, outside the other side of the Bollinger Bands. Why? Relatively high, relatively low. So if the price is already relatively low, I can't expect him to drop any further. The probability becomes lower and lower and lower for more falling prices once it reaches the Bollinger Bands, the outsides. So that is my interpretation. And you see it that this is true in a very, very high number of cases. Of course, you have also moves like these, but then you're free to go as a trend follower with another technique, with another strategy. But if you use my expander, see how beautiful it is. Stop loss over here, mean reversion, pull back. Here you go. So in general, with this strategy, your profit target follows the market move. If the market doesn't move, like here, just assume you would enter here. You feel like this could be my target, but the market doesn't move so good, so it just is a little bit lower in your profit. But what can you do? You just can do what the market offers, right? You just can take what the market gives you. Everything else is like, yeah, I have a wish, you know?
Well,
but market doesn't follow your wishes. It does what it does.
I just want to let everybody know that you in fact teach these strategies. And of course, what you're teaching is a decision matrix, which has a high probability of success consistently over time. So it has a high, we might say, batting average. And you also combine that with really good risk and money management. And so the combination of those things together is what allows a person to become a successful trader, move towards professionalism, which is one of the things that you teach in your school. And of course, you've accomplished this for yourself. And so this is really powerful, because look at the elegance of this decision-making matrix and how it works. And then the beauty of combining that with good risk and trade management. So anyway, I just wanted to add that in because you know, you practice what you taught, what you teach.
True. Yeah. And you can do this, you can apply this on every time frame. If it's daily, I mean, look at this hammer. Wow, this is pure pain. You know? Yeah. But
That
of
is
course,
impressive.
you also have to take your profits relatively high, and that's it. If you're greedy, you end up here again. Well done.
Yeah.
And that's the point. It's trading. It's getting in, but getting out as well. Trading. So
you make me think of a great book by Mark Douglas. He wrote a couple of really great books on being a trader, and of course he points out that the markets are a ruleless thing. I mean, it's just like every kind of indicator known to man, and that you have to set up your own rules, call it your own game, and you have to play within the confines of the rules of your own game, which has a high probability of success. And that's where the discipline comes in. And this is what you are really talking about and teaching. And this is elegant in maybe in its essential simplicity, but also this is the way great traders trade. So I just wanted to add that in because I think that there are some really great people that have taught, for instance, Mark Douglas, the disciplined trader. This is how you do it. And so Wieland is doing a nice job of giving us one aspect of the way you can create rules for yourself for how to conduct yourself in your trading day in and day out.
Yeah. So, and yes, true. I teach this, I do this, and talking about personality, I mean, I hope everybody read like Trading in the Zone by Mark Douglas, which is a great book as well.
Book. Yeah.
So it has to be, so every trading approach, every strategy, every technique has to fit to your own personality.
Brilliant. Yeah, that's so true.
That's why I tailor-made the strategy for myself, because I felt like everybody was talking about, yeah, you have to be a trend follower, but I'm not a trend follower. I don't follow any trends. In real life, I don't do it.
Yeah.
You know, I live my own life. I do what I feel like is best. So why should it be different in trading? But when I'm not a trend follower, what can I do? I have to do counter moves. It's like I'm forced to, you know. So that's my approach to trade my own personality. And then we come back in, yeah, then you have the discipline and also the trust in what you're doing, that it's right.
Well, we are close to out of time. And so tell us how to move forward with you.
Well, I teach you how to trade. Oh, Mr. O. I teach you how to trade.com or Torero Traders School.com. So both leads all to me. There you can have this video in a little bit longer form also explained. And Bruce, I also right now I'm about to backtest this for NinjaTrader, and also I'm about to program this for MetaTrader 4 and 5. Takes a while, but NinjaTrader is next. So maybe this can be something interesting, just giving it as a signal. Yeah, and of course, catch me, you, Bruce, as well as member of the board of IFTA in one of our IFTA webinars, or even in the next conference, or in a local society all over the world, in the US or in other countries.
Wieland Arlt, thank you so much for being here. You have to come back. And
I'm hoping, yeah, looking forward.
Oh my gosh, sooner the better. Thank you for being here, and we will see everybody next time. Thank you.